Yeah, this really entwined with the poll we did as well. So it all works together. And really, we're going to go through some of the historic themes and the benefits and the issues of thematic investing. And then I'm sure these guys will have something to say about it. But just looking at this graph has a really idea of some of the historic thematic investments. Some which people might be more familiar with is the Japanese investment trend in the 1980s, where everyone just wanted to get into the Japanese market. So you saw lots of people going into it. You saw the currency as well appreciate during that time. And then a bit more recently, we saw the FANG companies over the past decade, of course, as those all exploded. And then you saw in the late 90s, early 2000s, the NASDAQ index explode as well. Some that you might have not be familiar with because it was even before Aaron's time, maybe not before Aaron's time, but at least before Ryan's, the European stocks in the 1950s where they exploded after the whole idea behind it was the rebuilding after World War II and investors really wanting to invest in that market. So what is thematic investing? Thematic investing is a top-down approach, which means taking into account large macro-driven qualities, whether it's GDP, interest rates, or sector specifics, or in this case, a specific trend. Really, the difference between just a standard sector or industry investment compared to thematic investment is thematic investment normally has a story around it. So, like I was saying, with the post-World War II rebuilding of Europe, that is really what the thematic investment, you have some sort of a tangible story to build that theme. As well, another example more recently that wouldn't be on that chart is in the late 2010s, the legalization of marijuana, where investors just piled into cannabis to do with that legalization. And we're seeing a bit of that actually again now that is progressing in the US, but we saw 2016, 2017, especially in Canada, where investors were just dumping money into it. And as it is a story, you'll generally just see news stories covering it within the investing community first, normally, and then you'll start to see it outside the investor community. But it can go the other way around, where it's a more generalized topic, and then investors jump in after the fact. You really know it's an investing theme once your taxi driver is asking you about it, or someone who's not normally giving you investment advice or asking for it. That's when you know it is a prevalent theme. And of course, as themes permeate investors and the general public's thoughts, this investment method is similar to momentum investing in many aspects, where price appreciation leads to more price appreciation. And of course, on the flip side, price depreciation leads to more price depreciation. Then this would, of course, create a high volatility investment strategy. So why would someone invest thematically? The biggest reason is it's just an easy way to invest. You have an idea whether it be Japan is going to be strong in the future, or let's say your AI investment that is going to be the theme of the next decade, is you're done really researching at that point for many people. You have your investment thesis. You can go from there and just work on your investment, how exactly you're going to invest. And in this case, it's generally through ETFs or funds, but more recently, of course, ETFs. Compared to what we would do, which is a fundamental bottom-up approach, which is effectively on the polar opposite end of a thematic investment, is we comb through individual company filings, which obviously, since you're going one by one companies, you hit a lot of dead ends and a lot of really, you're looking through the individual filings, and it's a lot more individual, small detail work versus the broad picture. So like I was saying, most of the time you're investing through an ETF these days, but you might be doing a mutual fund to do a thematic investment. But we're going to focus generally on ETFs because they seem to be the predominant method of investing thematically these days. They're generally liquid, and you can generally look at the bid and ask spread to give you an idea of how liquid an individual ETF actually is. For retail investors, ETFs are generally liquid enough to manage quick inflows and quick outflows of capital, which is why people like them. And of course, though the larger the capital you want to invest, the more slippage that would occur, especially on the very small idea ETFs, which might only have 100 million under investment. And as you are investing in, you are investing in a trend, and the brokers would like to say in asset managers, I'm going to go into why this might not be the case, is they will say it provides diversification benefits to a broader portfolio. But like I said, I'll give an idea of why that isn't always the case in a couple minutes. So really, what are the issues? Why am I being critical of it in many cases? Well, first of all, your idea may just not be able to be invested in. What I mean by this is there's not always a public company or a public investment vehicle that you can actually use to invest in it. So let's say you're using an ETF or a mutual funds. They may be limited by size. They may be limited to what they can invest in. So they might not be a public company. So those ETFs can't actually invest in it. They can't invest in private equity, which obviously you as a retail investor may not do able to either, but that would make it so your investment thesis is just not investable. As well, ETFs are, if it's a larger ETF, let's say $1 billion fund, and you wanted to invest in a small cap company, or the ETF wanted to, they decide, oh, it fits the theme perfectly. We want to invest in this. Let's say it's a $20 million company. So an ETF might be able to invest, and this would probably be on the higher end, $1 million into that company. But even though they're owning 5% of that company at that point, it would only be 0.1% of their total portfolio. So even if that company did great, it really wouldn't affect the portfolio. Even at 100% return, that's 0.1% of a total portfolio return. So obviously, as the fund grows, it can actually eliminate some investment ideas, especially in newer ideas in a newer thematic fund. It might just eliminate you being able to invest in it through an ETF, and then you would have to go through individual companies, which even then, it might not align with why you're investing in that theme. As well, since most people are using funds, it's top down, and this is why I'm really focused on fund, is that you normally use funds when you're doing top down investing, is you will have management fees, of course, which they will create a drag. And if your specific theme may be smaller, it might have a smaller investment theme, it will likely mean, since it's a smaller theme, they have less assets under management, which means they have to make up for their fees with a higher asset under management fee. So instead of, let's say, a 0.4% investment fee under management fee at MER, it might be 1% or even upwards of 2%, which just creates a massive drag on any potential returns. And the next point that is an issue with thematic investment is it relies on momentum. Most people will focus on the upside when a new theme appears, but this relies on more people accepting the idea and more people implementing it in their investment thesis. So that is really at its core a momentum investing idea. As a result of this momentum, you can end up with absurd valuations with analysts of these companies moving away from, they'll first go from price to cash flow to PE to adjusted EBITDA, then to price to sales. And then they'll even do stuff like page views, which you saw during the dot-com bubble, when you just stray farther and farther away to support these valuations. And that is an issue with thematic investing, is you'll have the asset managers or researchers, they'll stray farther away from the fundamentals to support these valuations as it has to keep on growing. Last but certainly not least, these funds are not as diversifying as the various asset managers running these thematic investings want you to think. You really generally have them saying 2 points of benefits of diversification internally within a fund and in the context of your overall portfolio. So first, within the fund, some asset managers like to say they're diversified as they invest in dozens or hundreds of securities within their fund. But the issue with them saying that within a thematic fund is because it's a theme, they will inherently be highly correlated, meaning that they have those risks. Yes, they might get rid of a few of the idiosyncratic risks to an individual company, but they're increasing the risk of their correlation between the company just due to the nature of this type of fund. So simply put, really, a thematic fund is meant to create a concentrated position to expose yourself to a specific theme, which is inherently not diversified. You might get a couple less idiosyncratic risks, but then you're also losing the upside too as well, which these guys have talked to about many times. As well, second, the point to it is diversifying your overall portfolio. Your portfolio may see some diversification benefits, but this heavily depends on what theme you're investing in, as well as what you are holding. So let's say going back to the 1980s with Japanese stocks, if I were to invest that as a Canadian, I would have likely seen quite a bit of diversification benefits, geographic diversification benefits in this case. But then let's say if you're investing in the NASDAQ as an American in the 1990s, it'd be less diversifying in compared to it, as you would have a higher correlation. And then because it's high momentum, you'd have a higher beta compared to the general US stock market. In other words, it creates risk. My point is, even though fund managers will tote the diversification benefits from investing in these specific thematic ETFs, which they hold a larger amount of stocks or securities, is not exactly cut and dry. And in reality, some cases it might actually increase risk, even though your point of diversifying is to decrease risk. So, lastly, after critiquing it for about the last 5 minutes, how can you actually incorporate thematic investing in your portfolio? I would go through a couple methods, or say a couple methods that would be better than just a blanket approach to thematic investing as a hybrid approach. So this is really combining your top-down approach, which thematic investing normally is, with a bottom-up approach, which is similar to what we do or what we do in most cases. So you identify a theme, let's say it's AI, you go through all the AI companies and find which ones actually trade at a decent valuation, which ones are actually a good company, and not just purely momentum hype when they're trading at 100 times sales or something like that. Why would you want to own that in your portfolio? Which many of these ETFs will invest into it. They say, oh, it has AI in its name. Well, that's the checkbox, and it's in the ETF now. You now invested in a bad company, even if it is 2 or 3% of that ETF. You now own part of that, and it will eliminate your gains of the better companies. Second, looking past internally within a theme, you can look at adjacent industries and companies for what will really benefit from the theme as well. This can allow for the upside of the trend, and it lowers some of the downside risk. Because if your adjacent company or industry is only tangentially related, they'll benefit from the underside, but then they still have something backing it if that theme falls apart. As well, these companies do tend to seem to be priced better, as the pure thematic investors will just overlook them. So you get less of that momentum investing and more fundamental investing. And that's where I'm going to wrap up my monologue here. Is I know Ryan has a company in his mind thinking about what adjacent investing it is. And it's one we've covered quite a few times, but I'll let him go through that.
Yeah, I think you're anticipating what I'm going to say here. If you look at, I mean, often what leads us to a theme, though, is really just looking at every company in Canada by the numbers, the revenue growth, and the cash flow that leads you to themes. That led us to Hammond Power over time. It is an adjacent way to play the electrification theme, but the numbers were there, the growth was there, the low price relative to those underlying numbers were there, and it became a lower risk way of playing an electrification theme. Even if electrification didn't move forward, you were buying a business that serviced other industries that had nothing to do with electrification. They build transformers for the oil and gas industry, for instance, and before electrification was a theme, they were still making good money. So if you could find something trading at a reasonable price that can benefit significantly from a powerful theme, then you're limiting your downside and you have the upside that you're looking for when you get a theme right. So I think that is a great way to play a potential theme, because you
Yeah.
never know for certain whether you are going to get behind that theme. But if you have it backed up by a company that's already going to do well, or at least reasonably well, and then if it hits the tailwind of that theme, you can really have a winner. And obviously, you can see that's what's gone on with Hammond Power.
Push back on me if you guys want, but generally, I mean, I know you guys will, but generally, like Photon Control was, kind of a play, like a similar kind of thematic play on the semis, but yet they were selling, sensors to the semi manufacturers. That's correct. I mean, I know that
Yeah,
it's
if you were
very,
positive on semiconductors in any given period of time, there was a lagging effect, so you're able to buy them, ahead of that. But yeah,
yeah.
it was definitely a way to play that for sure.
Mhm.
Yeah. Yeah, and then if you talk about thematic investing, I always, the limitation of it is everybody's looking to find the greatest theme of this decade or the next decade. The past decade, as we know, we've talked about this in the past, the best performing stock on the entire Toronto Stock Exchange was Boyd. So they own auto body repair shops. Nobody was predicting auto body repair shops or a consolidation of them to be the best theme in the past decade. But the company that executed on this best, which I would say is Boyd, produced the return that the best return that you could have achieved in the market on the Toronto Stock Exchange over that 10-year period. So no theme would have helped you there, but the numbers help you there. So limiting yourself just to theme investing, it can be part of the equation, but limiting yourself just to that is probably not doing justice to an overall portfolio as well. like we said, if you nail a theme with a good company, it can really provide tailwinds. But I wouldn't just go with thematic investing over time, because if you get it wrong, you can really get it wrong, and it can go south in your portfolio.
Yeah, just on that last point is I highlighted Japan quite a few times because it peaked out in the, I think it was 1979. I'll get the correct update up there, and it just passed after whatever 30 years, or I guess be 1989 wouldn't it be?
Yeah.
After 30 years, 35 years, it just passed all-time high set then. So if you were holding that entire, and that's not inflation adjusted, that's just the index. So you had to wait 35 years to even hit parity if you invested at that time.
Yeah, and there's other themes, like they're not decade-long themes, but themes that could have promised to be that. Like cannabis was a tremendous. Everybody in Canada wanted to invest in it. 3D printing, I remember for a couple years, and stocks in that sector went way up and then just went off a cliff. So if you are positioning 30, 40, 50% of your portfolio behind what you believe is the next greatest theme, um, you're subject to high degree of volatility, and you can really slaughter your own portfolio doing it that way, to be frank. So buying the good companies, if they happen to get powered by a theme and it powers them higher than you ever thought they could, great. But make sure you have a good business, good balance sheet, all those things we always stress behind the company that you are looking at to invest in a theme. And
one last one.
When we invest in AI, we do that as well. We buy companies with good balance sheets right now, good cash flow. And Aaron talks about that all the time.
Yeah, I was just going to say, like,
so hopefully he doesn't now.
One last one that like Peter Lynch and Warren Buffett talk about, like airlines. Everybody thought, whoa, wow, like airlines, air travel, this is the new thing. Well, it just so happens that, airlines are kind of poor businesses, or they're very logistically tough businesses, in general. So
razor thin margins. It's
exactly.
Crazy how little
so while
they make
everybody
on
in the
flight,
world was thinking, airlines are going to be the next best thing, this is the next best theme. Well, it didn't end up happening that way. And I know one story of Warren Buffett ended up, I'm pretty sure it was Warren, he ended up, or maybe it was Peter Lynch, I'm getting them mixed up, but they ended up buying an airline because they thought, let's invest in this theme. Well, and the stock ended up performing well only because of the outbreak of the Vietnam War, because this airline was, shipping back and forth. If the war didn't take place, he stated himself, it probably wouldn't have worked out for him. Anyways, let's move on.